So hi, my name is Jude. I'm leading the solution engineering team at EMEA for Mambu. I am with Mambu for almost 5 years. I also come from a background with the fintech industry and also financial institutions.
Hello, my name is Andrzej from GFT Poland. I lead the solution engineering team for CE. I'm at GFT for 6 years and my main experience is core banking implementations.
When banks actually delay changing their core system, they're not just delaying using their or dealing with their old stack, they're actually increasing the immediate risk of using it, especially with the agile fintechs that are competing with them. If you look at risks, there are different risks that I can think of. One, of course, is efficiency and cost. Dealing and maintaining with those tech stacks is very expensive. And not only that, if you also look at the employees at those companies, the experts, once they retire, the companies actually end up with a huge knowledge gap. And that, of course, is going to lead to further manual processes, again, less efficiency, and they're not able to compete with today's world. What do you think?
So I fully agree with what you said. When I talk to the technology directors in the banks in the region, I often hear that my best experts are now starting to retire. My best experts for the current core banking system. It's becoming an issue and we need to deal with that. Also, the other aspect is banks try to modernize around the core, modernizing the middleware, modernizing the front-end channels, but in the end you have this legacy core in the middle that is modern mainframe, that is, it has issues of its own with scalability, with optimizations, and at some point you can do only so much around it. You need to focus on the, let's call it the problem at hand, where the performance issues are, where the agility issues are, when flexibility, limited functionalities. Maybe
also another risk I would look at is, of course, innovation. So these traditional banks, for example, they face a lot of innovation roadblock, if I may call it this way. If we look at average fintechs, they actually roll out, let's say on average, 20 to 30 releases or features per year. While if you look at traditional banks, they're barely maintaining or able to maintain the upgrades and the minor upgrades for their tech stack. So again, they're facing the inability to be flexible, the inability to create new features, new products, and keep up with this market.
Yeah, I couldn't agree more. So one of our customers we're working with, they have a release cadence of 3 months. So you need to plan ahead for the 3 months, do everything within the 3 months release because the next chance to go to production is in 3 months. We're working to improve it with the new core banking, but with all the limitations around, with all the integrations, we still now have it should be 2 weeks, but it's a monthly cadence, whereas these tech companies, they can release daily, right?
Exactly.
Multiple times a day, as soon as the new feature, as soon as some bug fix is available. So this ability on the go-to-market time, innovating is really different. And you mentioned also the upgrades. That's an issue in itself. So when you go with upgrading these legacy systems, these are sometimes projects in itself that takes weeks, months, blocking the business as usual, blocking the release cadence of anything that's innovative. I think these are the key factors I see when it comes to legacy core banking as the blocker.
Yeah, for sure. Considering that Gen Z is now entering the workforce, and they are considered now in 2025 the largest age group in the workforce. So banks definitely need to start catering for them in terms of the products, the services, and so on. Maybe one of the things I would mention is the focus on the digital engagement layer. Obviously, the older generation would still prefer going to the branches, dealing face to face with the RMs. While the younger generation is still very tech savvy, they prefer to deal with their banks, the financial institutions, definitely digitally, with their mobile application, their internet banking. They'd like to get onboarded using these services. So this is definitely one of the main things I definitely see.
I fully agree. So this Gen Z, they were raised with phones in their hands, with phones that have access to the internet, They're used to completely different experiences. They trust the internet more. It is there, it never fails them, it is always available. They shop differently. They communicate differently. Online experiences first. They order food online. This is normal. So they expect the same experience from banking. And the tech companies that are providing these food ordering experiences, taxis, etc., they are very good at user experience. So they expect a seamless experience. And that's why banks, in order to attract this generation, they need to adapt, provide the same experience, be where they are. So we're talking about embedded banking, seamless banking, or even invisible banking, so that the banking products, payments are available at the point of sale without even moving to another site, another application. These are the experiences they expect. If banks cannot provide, they will be looking for alternative solutions like Revolut or other neobanks.
Yeah. With Revolut, for example, and N26, you see like how seamless the onboarding journey is. You can literally do everything online with a couple of minutes, and boom, you have a bank account. So it's definitely a game changer in this industry, at least. Maybe a couple of things that fintechs do differently than traditional banks is, as we've mentioned before, having a digital engagement layer that's seamless, creates a seamless customer journey. Maybe another thing I would highlight is offering hyper-personalization. I mean, before, all the banks would just offer one-size-fits-all product, like here's a loan, here's a deposit, and you have to deal with what's there. While now the banks and the fintechs, they're offering a more personalized service and products based on the customer needs. And of course, that creates customer stickiness because they feel that they're heard, they feel that they're seen. So that's also like definitely one of the key factors I think that they do at this point in time.
Yeah, couldn't agree more. So customer centricity, focusing on an individual, their needs, that's one thing, but also fintechs, there is a tech in the name for the reason. So they are tech first, and the tech is at the center of their business. And they learn from the best. So what we mentioned already, agility, fast releases, fast time to market, gathering feedback from the market really fast and adapting to it, testing on the market, so doing A/B tests with the users, these sort of things. This is something they're doing daily. For established banks, it's a struggle. It's not so easy because the tempo of the delivery is not so fast, the releases process are complex, and also testing on the users. When you have an established bank, you don't want to be tested on. So they have to be more cautious. And I think there is a lesson here for the banks, because there is a way to learn. There is a way to do it, to work more like 10 companies, like big techs. Banks, yesterday here at the conference, I spoke to one of the executives from the banks in the region, and he said, the banks, we like to think we deliver products, but we don't. Cash loan, is it a product? Does somebody want more cash? No, they want a car, they want a house, they want to renovate a flat for their kids. So thinking in this way, like how can we be more agile, be there where the customer is, provide value, not us being at the center, but having customer at the center. This is the key. And this is what big techs, fintechs are doing really, really good.
Yeah. Also because I think they're more obviously cloud native, like their solution is cloud native systems. So it gives them the agility, it gives them the ability to create different products very quickly, gives them time to market, and that's definitely traditional banks, they cannot compete with that whatsoever. Maybe also if I add on this, fintechs do have a lot of, I think they do take the partnership approach very seriously. If you look at fintechs, they don't focus on building everything themselves, which again, this is completely different than what we're used to from traditional banks, where they want to build everything from front end to core to the back end. They want to do everything. Fintechs, no, they do focus on specific partnerships and sometimes strategic partnerships. So for example, if you look at Time Bank has partnered with different retailers in order to offer, well, basically more products. They were able to offer their solutions to a wider range of customer base because they're partnering with the right systems. So this is definitely an add-on on what you've mentioned.
GFT will build numerous new banks, and this is what we see at the start. That when starting this kind of project, we're not looking to have everything in-house. We need, for example, we would like our customers to be able to do investments. Nobody's saying, okay, we need to set up an investment system that will manage it. No, everybody's looking for a SaaS solution. Yeah. So we don't have to manage this. Yeah. We get everything from the start working. We get the support, for external support, so we don't have to build our teams to support yet another tool. And this enables time to market. If you are not happy with this provider for some reason, you can switch. You don't need to, adapt your infrastructure, create new servers, or whatever, to set up this new, or do a heavy migration. Migration is needed, but it's completely different. So it's a bit like Gen Z, right?
Yeah, definitely.
They can switch solutions at the snap of their fingers.
Exactly. Pick and choose. So if you look at the banking industry, I think they're one of the industries that have most data about their customers. But what they're struggling with is actually leveraging that data and creating more personalized experiences with that data. That's why, for example, they definitely need to invest in analytical solutions to be able to analyze the data properly. And of course, agile core banking systems so both of them can work together with API-first approaches, integrate properly together, and use that data for basically insightful and create value for their end customers. That's definitely one of the things I would focus on. Another part would be also personalization. So getting the data, getting the insights, but then you of course need to personalize that for your end customer. You can't just offer, as you've mentioned, just a mortgage loan or a car loan. You need to be more adaptable to the market, to your end customers and end clients.
Yeah, so I agree, data is key here. So getting the right data, having access to it, being able to work on it, this is important. And this is often challenged with the legacy systems. So they're built around this monolithic databases, and getting the large amounts of data, making it usable, is a project in itself. Whereas these new solutions like Mambu, data is there, it's available, it's being streamed out all the time with every transaction, every interaction with the core banking system. So it is built in a way to make data available. And then the banks have to be smart and use this data, how to use this data, what to do with it. It's a goldmine, so you can understand personally your users' behavior, their habits, what they are spending on, where they are spending, how they are interacting. Is it internet? Is it shops? What wallets they are using, etc. And using this goldmine information, the experience can be really, really personally tailored. You can simplify some user journeys for a person, differentiate their experience. Make the key user journeys that they use available at the first place when they log into the app. And when we talked already about the Gen Z, this really makes a difference. Yeah. So when they log into the app and it's convenient, they have they log in, I often use this functionality, it's here. Instead I have to go to this menu, find this, okay, here it is. It's a game changer, and it really can be the differentiator between them using the bank's app versus switching to a competition, because it's a couple of clicks less.
Exactly. It's offering the right product at the right time, I think. That's one of the main things the younger generation would look at. I mean, for sure, if you spend, for example, every day on like a shop in the street, imagine like how cool would it be if your app starts telling you like, okay, you get, for example, on your 10th cup of coffee, you're going to get a discount. You're definitely going to switch for that. Yeah, Gen Z loves this personalized, even like, you see how small this is, but because the fintechs know how to use that data, they're actually giving that personalized flavor, I would say, to offering their products.
Yes, and with hyper personalization, it doesn't have to be a big campaign. You know, buy 10 cups of coffee somewhere, but it can be really personalized. It can be really targeting just this one user who has this specific behavior, and this can be automated. So it's this marketing, this engagement is happening all the time without human in the loop from the bank side. Dynamic pricing, providing this experience that they're looking for.
If traditional banks still want to survive in today's economy, for sure they need to collaborate more with fintechs. Yeah, maybe if I want to highlight this more, there's always room for both of them to work together and create value. And I think this is helpful for both of them. Maybe in order, to make it better in terms of collaboration and how they can end of offering the right product to the right customers. I think they both need to focus on what they do best. And that's where banks, they need to focus on their customer base because they've already created that trust throughout a long period of time. While fintechs need to focus on their agility, on their flexibility, ability to create different products at a very fast pace and time to market. Maybe a very good example on this. So ABN AMRO has announced yesterday a very great collaboration where they've created what we call nowadays as a dual core offering for Gen Z. And Mambu was the chosen vendor for that. So when you see these big names doing such collaboration, you understand that they understand the competition. They feel the burn, if you want, if I may say it this way. And they're entering into such collaborations, which is great, of course, for us as end customers, because then again, we do have or end up with multiple offerings, multiple products, multiple services that we get to choose from.
Yes, I agree. So now the collaboration between banks and fintechs, this is the case where 2 + 2 = 5. So we get more value than working separately. So as I already mentioned, fintechs are faster to market. They are very innovative. And instead of competing with this, the banks can reuse it, enable it for customers to have those experiences, those fintech experiences within the banking context, within the banking app. And there's also another angle, like banks, I already mentioned the invisible banking. So the bank does not have to be the front for the customer for many services, right? The bank wants to provide a service, wants customers to be able to access their money, to take a loan, but it doesn't have to be through the banking channel. So this is also important, enabling fintechs to actually use banking products, innovate around them. Maybe this is not a banking institution, but example, so in Poland, BIK, this is like the Polish credit bureau, they enabled collaboration with fintechs by providing their data for APIs. So fintechs can use this data to innovate around it. So instead of the credit bureau, instead of building their own new views on the customer, new models, they enabled fintechs to do it. Of course, under regulatory supervision, of course, it is commercialized, so the fintechs pay for this access. But this is a very innovative model and creates new value for the market. And I think this is also something that banks should think of. When the customer is having online experience, buying, looking for clothes or looking for cars, it should be there. Their money should be available there. The loan to finance what they want to buy should be available there. One of the Polish banks, Velo Bank, they created this solution. When you're in the shop, you can take the photo. If you like some product, there is the price tag, you can take the photo, and based on the photo, they give you an offer for the loan. Right there in the shop, and if you agree to this loan, okay, you can pay at the shop instantly with the lent money.
That's very nice. I mean, again, Mambu is considered, I would call it a fintech as well, because we are very innovative. We are API first. We do have RESTful APIs, and also it's cloud native. So we were born in the cloud. And for that, it gives us way more agility, way more flexibility, way more scalability to help our end customers. So if I look for the next 12 months, definitely there's a lot of things happening on the mortgages side, a lot of things happening on the Islamic banking as well. There's a lot of features that are going to come out. Again, we roll out features on a day-to-day basis, so this is considered our norm for us.
So as GFT, we main customers for us are the banks. We will continue focusing on modern core banking, modernization of the core banking, helping banks with modernizing other systems. But also AI has come there and is coming for the banks. So we are helping them enable themselves to properly use AI, to have the data available for the AI, to work on it and to enable their infrastructure legacy systems for the AI to interact with. So I think next 12 months for GFT, AI will be very important.